Okay, we are Wednesday, 17th of May, 2023. Looking at the SPOOs here. I like the one way to describe this that I've heard recently is violently sideways here on equities. And you can see the daily bars here on the right hand side of the screen. I think you got to be careful here. Rob helping us out with a good range here, 41.13s to 41.75s. And certainly we're kind of guiding here in the room. Well, I am looking at really longs only at 13s or 18s below, and then trading up to the 41.75s area. And then you can at least play for the breakout from a very nice area and point of advantage. And inversely, I think if we push up here, it might be a bit cruel, come back down, and then look for longs to then go on kind of a day 2, 3, 4 bid to break out. But for now, we are in the range. You're looking for longs here, 41.13s or 18s to the upside. You're going to do a detailed tech look ahead here in the room in a minute. Yes, or the Nasdaq is on an absolute tear here to the upside. And really, there's no stopping this until we get to 14.056s. You probably will get a little bit of a pullback onto trend here. Started down here, but really I think we're going to keep on going with the mood here to the upside. Tech, I think people are back in love with tech. Oil, it's dangerous out there. It's dangerous. Very, very, very tough market here, guys. Very tough markets. We had the flash crash down to 64.27s or thereabouts. This does now look to me like it's going to try to then sell down lower below 70s. We've got the White House now committed buyer looking to refill the SPR. Just a fun fact here, they filled that SPR. So the last time it was full, it was filled from an average price of $30 to $40. So now, Joey B is buying a bit high here, but fair enough. So does that mean we can't sell below 70s? Absolutely not. That does not mean, that's not what I'm saying. But I do think we can now look for a little bit of a push here. But just as you can see on when I first opened this chart here, we're looking at some serious resistance around that 41.73 area. And if we can't resolve that today, I think we're going to be selling off of there, 41.73s, to then kind of come down. So that would be shorts from around here on oil to then move down and break lower. All right, break lower, and you're going to be breaking a little bit of this trend that we have here. So keep an eye out for that on oil. Gold, yeah, gold's finding a nice C-val there.
Jeffries, the Democrats are to discharge.
So yeah, looking at let's see, the gold contract. Really want to look at gold here on the daily bars. We're talking a little bit about what happens if the US defaults. I think if the US does default around June 1st, I think US T-notes is going to be absolutely eviscerated to the downside. The yield is going to absolutely scream to the upside, and gold, as we've been saying, is correlated, I think, positively correlated with the yields. And so that's going to be gold. You're looking at easily 21.20s testing on the trend here. If not, these are daily bars. But that's what I think could break us out above here. So supports generally at the 1970s here on the downside. Maybe a little bit higher here. Yeah, maybe. Actually, no, we'll leave that where it is there. But I think we're in a nice buying area here on gold. 1980s is the kind of absolute low here. Might tighten that up a wee bit in 1982s. A fine year, and then look for the longs to get up out of here. What else can we see? Yeah, bonds, despite kind of having a not so poor looking set of economic indicators and data coming out, you wouldn't be blamed for selling the bonds here, but technically I think they're back at average price for the year, and I think we could stand to rally. And I think technically this is also showing you that European government paper, as in European bond traders, are not letting go of any long contracts here in case the US does default. Well, in that case, you know, they have a really sensible area, average price on the year to then rally out of. So do keep an eye on that. I think if we sell down out of here, that is a sign that the US is not going to default, and it will sell down below here should the narrative start to change of, you know, maybe they've averted the you know, maybe they've lifted the debt ceiling or something like that. Well, then you're going to be going down here on German paper, right? And that's really all to look out for. VIX, yeah, Par was noting there's a massive gap up here on the VIX overnight. Here you can see quite a lot of data on that chart. We're really just testing into this 20 spot 67s area on the highs, the monthly level for us. And is it going to close the gap? I don't know. These gaps, you know, you can't really trade too much off of them. They're not looking to fill and close the gap so much as you would see on equities or indices or FX, you know. So yeah, so look at Nasdaq holding this area, and I think 13,639s we might see today on the Nasdaq, 41.52s on the SPOs and higher. And Dow looking to get back into at least 33.240s. All right, that's enough from me for this session. Have a great one. Talk to you later.